right. Well, welcome everybody to today's WASDE. We will be starting here very quickly, but I do want to welcome you and introduce you real quick here. We've got Sterling Smith. He is our Director of Ag Research. And joining us today, we have Mike Toohill. He is our corporate agronomist, and Brooks York will be joining us. Oh, he's here. And he is our Director of Producer Services. So welcome, everyone. I'm not sure exactly how exciting today's report is going to be, but we are going to have some good information for you regardless. It looks like Sterling has a costume. It is.
No, I've got my, there was an article. These have become rare. The manufacturer cannot get the stuff to make these. And there is a shortage of both corn heads and cheese heads. So I'll put this up on eBay. $10,000 will.
I'm good.
We'll take you a genuine corn head here.
I thought perhaps you might make a great deal for today's ASNA WASDE report, and anybody that might want to pay $5 could buy that before you put it up on eBay. Would that be agreeable with you?
Yeah, absolutely. $5,000 will definitely get you this corn head.
Excellent.
It does.
So last time you had that corn head on, if I'm not mistaken, corn was up about 26 cents. Now, it happened right after that phone call because it didn't maintain its momentum all day long. So I think what it calls for is there seems to be a correlation here between when you've got that hat on and the market staying hot. So you may just have to sleep in that thing for a while.
No, I'm just have to walk around wearing my corn head everywhere until we get to $8, and then we can all sell, and I'll take the corn head off, and we can all retire.
Yeah. Well, kind of a lackluster start to the day in regards to trade. I know we always take the opportunity here at the beginning of this to talk about maybe some of the fundamental things going on in the market. And if you're internal in ASNA, I've sent out a couple of correspondence on the river. I thought it might be interesting. I just got some river news, Sterling and Mike and Christy, from some traders in the Gulf and also Army Corps, and it looks like maybe a temporary fix on the Mississippi, at least to kind of get us through harvest. It's certainly not ideal. Drafts are still limited to around 9 foot in some areas, but the big problem down around Vicksburg looks like it's been remedied for the time being. So we had several barges stuck. The Corps came in and did some dredging, and it looks like, we're going to limp through harvest. And, of course, as far as the river situation being impactful, it's more impactful on soybeans right now. And, Sterling, you may want to allude on that. Why soybeans now versus corn? What's our impact there?
Well, the first thing is you ship soybeans before you ship corn. You need to move those, and you want to move those quickly. Issues we've seen, export sales have been, as you read my depressing report every Thursday. In fact, they're going to come out on Friday, but I'm going to be off, so I won't depress everybody. But export sales have not been very good. We've had a lot of, it's been very slow. So that's the first impact. The impact on the balance sheet is the soybean balance sheet is extremely sensitive. And a matter of just a few cargoes and a little bit of a slowdown, if we move that balance sheet from 200 to 300, we are going to move the market. So that is worry number one. Now, once we get into November, December, the river starts to slow down. Things will settle down, but we really need to watch these export sales, and we need to see them improve. That is the biggest concern I have.
Being the WASDE today, you mentioned the 200 number. Let's talk about the significance of that. First of all, that's 200 million beans left over on the balance sheet. You mentioned a move from 200 to 300. Now, I think we've got to say that it looks likely that 200 number could grow. It's not going to grow leaps and bounds all at one time, more than likely. How does that number get from 200 to 300? What are the fundamental things that have to occur for that to happen?
Okay. So right now the expectation for today's report is 244. I put my guess in about 220, and where I got those, I didn't increase production any, I cut exports. So how that moves is we see a couple of months, suddenly we see exports start to slow up a little bit, and beans are funny. You know, bean yields and bean production has a way of growing as we get through harvest. So if we cut a little bit in export and add just a little bit to production, suddenly that ball has moved, and that changes the tone of a $13, $14 soybean market to a $12, $13 soybean market.
Sterling, let me jump in here and talk to the group about what's going on in the Gulf and kind of how we might be able to break this down. So first of all, we go from a 14-foot draft to a 9-foot draft. So the number of beans on a barge decreases significantly. So if you're an export trader and you've got all your logistics lined up and you're going to get so many barges per vessel, all of a sudden, guess what? You've got to have that many more barges per vessel unless you're loading from your storage facilities, which a lot of that's not happening. So it's kind of a hand-to-mouth situation right now. We're getting barges in, we're loading vessels out. That the problem is your vessels have to wait a little bit. And to tell you kind of how hungry the world is, vessel demurrage, meaning the days that you're past your deadline to be loaded, was around $120,000 a day about 30 days ago. But because of this situation, there's been some negotiation. It's down to about $60,000 a day. So it appears that the buyers and the transportation companies are being patient with the situation. But let's illustrate this real quick. Mike, if you don't eat food tomorrow, can you make up for those calories on Friday? Possible, right?
Mm-hmm.
Now, if you don't eat food for 5 days, come back to us maybe after a South American harvest. So there is this logistics situation. While everybody's being patient, it looks like there are some remedies being made on the river. It's still not convenient, and there's going to be these small bites that we don't get. And Sterling, to your point, you've increased carry out by what, 20 million or so?
The expectation right now is increasing it by 44 million on this report, which I think is a little aggressive, but a lot of people have bumped up soybean yields. You know, they got cut sharply on the last report. Some people think they're gonna bump back up. I wasn't so much in that camp. The USDA's track record on doing that isn't so good. What this does bring in, usually the two slowest reports of the year are normally November and December. Usually on the December WASDE, they don't change anything. With this export problem, all of a sudden, the November WASDE is going to be a whole different situation because we may be addressing some export numbers. On the other hand, we might be addressing some lower corn yield numbers. So
Mike,
again, a mixed bag here.
I want to ask you, you were pretty bold in the virtual crop tours to put out if I'm not mistaken, a 50.6, 50.8 bushel per acre range. Have you changed your opinion on national yield predictions at this point in time? We got a lot of harvest to go, but what are you seeing out there?
On soybeans, Brooks, I'm thinking we just come up slightly today from a 50.5 to maybe a 50.8. So just a slight uptick on soybeans. I'm kind of got backyarditis on corn. Our corn crop in Illinois is so good. I think we drop a little bit nationally, but this Illinois corn crop is just incredible.
Well, that's good yours is, because ours here, I've seen a lot of harvest pictures. It's not a good thing. It's rougher than expected in most places. So we are definitely going to be behind the curve. And we got like a quarter inch of rain last night. That's the first time I can remember it raining in 8 weeks here.
Wow.
At all. And I started tearing up the yard 5 weeks ago, replanting after the drought. And this has been the only rain. That quarter of an inch last night was the only rain we've gotten in 5 weeks.
Sterling, I'm going to put Mike on the spot here, and Mike, I'm going to see how good your memory is. It is extremely dry in southern Illinois as well. We got a little bit of rain happening right now, and like Sterling, this is really the first rain I probably remember here in 4 or 5 weeks. which has been a really smooth harvest. But everybody can kind of use a break, I think, from a little bit of work, and also we need some rain just from a fire risk.
Mm-hmm.
Take me back to 2011 and 12. That 2012 dry spell, it didn't start in April or May. I think it started a little earlier. Are we seeing any correlation? I hear the old timers, they tell me every day, Brooks, don't you know it's the start of 2012? Is there anything behind that?
Boy, Brooks, I wish I knew. I just know this weather is so strange and variable. It seems like it takes weeks to get to a drought, and it takes about 5 minutes to get out of a drought. So again, I'm not going to put much credence to what's going on, although the drought monitor is very scary looking ahead to 2023 crops, especially in the southern and the western belts.
You mentioned that western belt, kind of a forgotten part of the country, and I know it probably holds a small interest for those that are viewing this today, but I was at a meeting where our Western Division talked about the reservoir situation in California, Oregon, Washington, and wow, that theme that Sterling's mentioned, no rain for 8 weeks, that's pretty much the story throughout the country, I think, right now.
Well, here in western Douglas County yesterday, we had a soybean field catch on fire, and the town of Waterloo, Nebraska, which is going to be a suburb in about 5 years, lost all of their water. There was no water in Waterloo for 3 days. It's that dry.
Wow. On another fundamental topic that's big in the news right now, I talked to an individual that's part of an ag research meeting going on in Prague really today. He's in Prague right now, and asked him about what's the European view of what's going on in Ukraine. And I bring it up from an ag standpoint. Sterling, you and I have talked about this. That export corridor has been open for a little while via rail, via vessel. It hasn't been interrupted as of yet. The maximum pace when it comes to corn, and we're primarily talking corn and wheat leaving Ukraine, corn at this point in time of the year, there's a maximum pace of about 98 million bushels of corn leaving Ukraine on a monthly basis. That's been going on for about 40 days. Just ask him what the demeanor was. I mean, he's close to the situation. And he said, really and truthfully, he said most members there believe there's about an 80% shot of that export pace continuing for another 30 to 40 days. And, of course, they always throw in unless Russia decides to do something, really, really out of the ordinary. But there seemed to be more optimism in his tone of voice and what that research group is saying versus what we're hearing on the news anyway. So, Sterling, talk about that for a second. We kind of switched from soybeans over to corn, but what does that mean for the U.S. Corn exports? Do you see that ticking down? I've seen a lot of analysts maybe take that corn export number down from a 2.4 billion number last year to a 2.2, 2.25 number. Is that the impact that we're looking for there?
That I think right now is where the market is and where the current thinking is. The problem with the current thinking is that can change on a dime. Seeing the attacks that we saw Monday and Tuesday into the western Ukraine, troubling one that obviously they're now going to try and penalize the Ukrainian people with direct attacks there. Another thing that I picked up from Jane's is that the weapons they're using are old, meaning Russia has used up all of their smart weapons, and they're going to be using a lot more blunt weapons, meaning things are going to be a lot messier, and the targets they hit, they may not be able to well target them. And the fact that they're running out of weapons, does that mean are they going to start looking at other high energy weapons as a potential option? And that's something that as Putin becomes more desperate, a cornered rat is a very dangerous thing.
Scary times. I left that individual in Prague, and I said, give me some words of advice. I'm getting ready to go on to a live WASDE report, and he said, the world is a tinderbox waiting for a match to be thrown. So we're certainly in some volatile times out there.
Yeah. And the further we're moving into we're starting to move into winter. So is Putin going to feel I either need to quit or I need to do something here to really change the path of this? And I think we are drawing close to where he's going to have to make some sort of decision.
Very, very interesting. We've wrestled with this Ukraine event probably back as early as April, and I think Sterling, you and I thought maybe this was going to be a short-lived thing where Russia came in and Ukraine may have rolled over, and boy, we're still sustaining this thing. We've got about as many questions today as we did on day one. It's just strange how the world works. Well, it looks like 10:59. And if you don't mind, I've still got some unsold corn in the field. You can put that hat on and bring me some luck. That would be it. That'd be good right now, Sterling.
All right. Well, here we'll pop up the screen here. We're about 2 minutes away here, and here to help out the corn world. Go ahead and let's see what we can do with putting on this head here. This is not going to work. My headset will fall off, then you can't hear. Handful of drug stocks doing well. Everything else is just kind of chopping about, and that's where we sit with that. And interest rates are still quiet. But again, issues with the dollar, the yen moved to new highs overnight. So again, the dollar problems. We have a lot of things, a lot of pots cooking right at the moment. So right here is the corn index stocks. The street is looking for 11.26. We were at 12.19 last time. So if we come above 11.26, that may not be as bullish as we want to see. Come out below that, look out, will be hot. Soybean ending stocks 200 last time, at 244 this time. Those are going to be the two big numbers. Most of the analysts' guesses, there wasn't a lot of deviation here. Everyone was between about 11 and 12 on corn, and everyone was between 2 and 250 on the soybeans. So not a lot of surprises. And here we go.
There we go. Yeah.
And corn ending stocks 1172. So we are a little bit big there. Soybean ending stocks 200 unchanged. They didn't touch that export number. So corn prices, see, we get the usual report chop, surge higher, and trade a smidge lower. Let's look at the soybeans. There you go. That's where we're going to be getting our strength. The fact that they didn't change it was probably the biggest issue here. Moving on to wheat. Wheat was down about 15 when we started. No one was looking for much on wheat on this report. So again, not that too big of a surprise. And let's see. And let's take a look here. What do we do with soybean yields? 49.8.
Wow.
So let's see here what we got here for soybean exports. Notice they cut exports. They cut exports from 2085 to 2045. Moving on to corn yields, 171.9. As far as corn exports, 2150. So they took 125 off the corn. So the USDA is beginning to address this export issue. As far as the global numbers here, soybean production let's see, what do we got here for, there's the Brazil numbers pretty much, in Argentina pretty much as expected. For the world soybean production, 391, about in line. Soybean ending stocks 101, that's a little bit bigger. But notice this corn number, the ending stocks number, down to 301 from 305. So again, showing some global tightness. And the market, corn's holding at -4. The beans looking a little bit better here. So clearly the USDA is paying attention to this export situation, and that is probably going to be, along with South America, our wintertime nervousness. So we'll sum this up. They also cut wheat yields a little bit, and cotton. If anyone's been following the cotton market, that continues to be a ongoing depressant, and that's 280. So that was again above expectations. So nothing bullish there for the cotton market.
Certainly, let's talk cotton real quick. One of the things that we talked about, as you know, as long ago as 20 months ago, is cotton tagging along with the equities market. Do you see any of that? Is that a correlation right now? We've seen equities tail off a little bit here. Cotton kind of sick. Is that are those a one-on-one correlation there, or do you think that has more to do with a fundamental supply?
Well, right now the crop conditions here are pretty bad, and I think the USDA is still working around exactly how much we have. The S&P 500 made a new low for the year yesterday, and I'll put up a cotton chart here real quick for us, and we can pretty much see the same story for the cotton here. We'll put up cotton, and let's get this a daily chart. And there's cotton. It made its low pretty much a week ago. So a little bit of a bounce here. And some of this is currency driven, and some of this is, the market had gotten too short and people covering in front of the report. This 3-day pattern on cotton, though, is bearish. When you see a rally like this, plug stops, it starts to go. If we trade lower, which this is a delayed quote, I'm going to guess we're probably going to be lower. We trade lower again tomorrow. That portends to a market going lower. So the situation in the cotton, again, there's a lot of global upheaval going on, and that is certainly making the cotton market nervous.
As we it's something that we kind of know is coming. We don't know when necessarily, but at some point in time, combination of currency value, combination of a couple of good crops, southern hemisphere, northern hemisphere, we start to see maybe, and I'll take that last statement back, we'll start to see a little bit of usage decline. Is this really the first time we've seen corn and bean numbers down in a WASDE report like this for a good while? I don't remember seeing them both tick down like this, and that's one part of the question. Second part of the question is, what do we look for next? Is it ethanol? Is it domestic usage that starts to come down a little bit in reaction to everything else that's going on? Interest rates up, inflation sky high. Where we see what's the other shoe to fall? We know exports number one. What's next?
Exports number one. The next thing I would look at are ethanol numbers and ethanol consumption, although we are doing okay, but our production numbers for ethanol are running well below what they normally are here. I can go ahead and punch that up here real quick if you want to take a look.
I do. I think this is going to be something that we all need to kind of look at and acquaint ourselves with. We kind of know exports. I don't follow these ethanol numbers on a quarterly basis like I should. Let's look at these.
I follow them actually on a weekly basis, and I'm going to highlight where we are with ethanol production. This is looking at the last 5 years. You can see right there where I'm pointing, that was the lowest level in 5 years, and that was 2 weeks ago. And you can see we're definitely trailing below, here's the 5-year average. We are definitely well below that. And crude oil's popped up a lot here. That's certainly a depressant in a way, in that people are not going to be driving as much.
Let's look at gasoline consumption if you can. Does it mimic that line pretty closely?
Let's see, gasoline. Let's find gasoline. Let's see what we got here. Gasoline, average price. Actually, why don't we just look at miles driven? That might be a little easier here.
If you name it, folks, he's got a chart for it.
And we can see it's flat, but what I would be concerned about, and I'm not talking about this being a worry today, but a worry for, let's say, 2027. What's the thing about this line really from 2013? It's not going up. It's flatlined. So that means the number of miles being driven isn't experiencing what we saw. If we make this chart go back in time here a little bit, you can see we generally were trending higher. We really peaked 8 years ago. So if we don't see this number going up, that means ethanol consumption is going to stay flat. And then we have this little issue with electrical vehicles. As that comes up, fossil fuel and ethanol consumption will slowly, very slowly begin to erode on that. So that is a small concern, but also a bigger concern right now.
And domestic meat prices. I had not been to my local grocery store. We've got a kind of a place that we'll grab meat for the grill on, and we don't not buying bags of groceries. We're running in and either buying steak, chicken, or pork. And I went in there and I was going to get a steak the other night until I looked at the price, and I was shocked. I hadn't shopped for a long time, so we went with the chicken alternative instead. Is this the third place that we really need to have our concerns with, Sterling?
Yeah.
Domestic feed?
This is the price of select cutouts. This is lower quality beef, and as you can see, we are at chart starts in the upper left and finishes in the lower right. That is not bullish. In fact, we are pretty much hovering. We made a new low for the year yesterday, and then when we look at choice cutouts.
Sterling, I'm not a livestock guy. Everybody knows that. But is this is the Western drought play into that chart at all as far as animals going to market a little bit underweight?
We're starting to see animals go into market a little bit underweight. The problem is the cash market has been stuck with cattle between 140, 145 up north and about 142 to 145 in the south. And no one's really been willing to move. And the problem is, this is your choice beef. You can see we're $2.47 a pound. This too is going down. That means consumer demand, the consumer A, is not willing to pay up because there's other knock-on inflation with this. The cost of moving this, if you look at the price of diesel, and let's not talk about the last 3 days because I got nothing good. The cost of everything else to move the meat is where the price is, not so much in the meat itself. So we have these compounding factors, and that's suppressing consumer demand. You didn't buy a steak, you bought chicken, and as people make that choices, that naturally depresses this, and that's could lead to some problems in some parts of the cattle industry eventually. But right now, we're not having any big issues with this. But if you really want to go for a ride, if you want to go to a thrill ride, you should go to Cedar Point. But if you can't make it to Cedar Point, you want to go for a ride, hop on the hog market here. As you can see, we've had, a serious problem where funds got caught on the wrong side of the market, flushed everything out. Now they're a net short. Now they're back on the wrong side of the market yet again. So we're going to see seasonally pork prices come down a little bit because that is the normal thing for this time of year. When we start to get out into January and February and through 2023, again, this theme of food inflation, this will be the canary in the coal mine before the cattle. You'll see hog prices begin to move higher. In fact, we've already seen belly prices probably crater around $1.10. They're already back to $1.40. So this picture is going to change, and that's going to leave the consumer stuck where, the beef will be a little bit cheaper maybe if diesel prices come down, but the pork prices are going to come up, and that means more chicken. Chicken again, just like the 1970s.
Hmm.
Mike, switching back over to kind of the weather side of things, I emailed you the other day and said, hey, what's your extended forecast looking like on the river system? And what prompted me to say that is I actually hear raindrops on my roof down here, so it's the first time in a long time. I don't know if anybody can see outside my window, but it's some raindrops on there. The Missouri River is probably the greatest benefactor to getting the Mississippi, the lower Mississippi, back up where it needs to be. Any long-term relief in that western plains, central U.S. area?
It looks a little bit better for Texas, maybe into southern Oklahoma, Brooks, and down through Louisiana, Mississippi, but not much relief for Kansas, Missouri, Illinois after this front goes through. So the maps did look a little bit better along the Mississippi, southern third, but not much help in the area from St. Louis down through about Memphis, unfortunately.
It was pretty amazing. We went through St. Louis this weekend, and wow, that river is really, really down. You know, you can't really tell when it's down 4 to 6 feet, but when it's as low as what it is, it's pretty amazing. It was about as low as the St. Louis Cardinals this weekend. I think that they could have used all 4 of us in the starting lineup, and we would have probably done what they did.
Wouldn't have made any difference, I don't think. So bad is bad.
Oh, hey, I have a question that came in, and so you might need to go back a little bit, but the question was, what were the yields the USDA gave for corn and beans in September?
In September, for corn, yield per acre in September was 172.5. They took that down to 171.9. And for soybean yields per acre, we were at 50.5. They took that back to 49.8.
Thank you.
That's a big decline when you think about that from where we were at 3 to 4 months ago in forecast. That's substantial. It's interesting, with the supply and demand tables, there's always a farm price that USDA puts out. Researched that a little bit prior to this meeting, and I believe that the suggested farm price for a 200 million bushel carryout on soybeans is around 14.65. Thus the rally today. So maybe a little bit more to go in regards to soybeans short term.
And when we look here at the soybean production, there's 65 million under the last time around. Suppose we see tightness in South America. Suppose we see that, yes, the record crop once again predicted in September and October is not the record crop like it is pretty much every year. And we get to January and things change. The Fed has done enough damage. They've broken a couple of things. And we see the dollar start to reverse. We could find ourselves in a rather tight soybean market. That's something, there's a canary in the coal mine on interest rates. Eventually they're going to stop going up. And when they stop going up, the dollar will stop going up.
Just a few comments about some of the state yields. It looks like to me, Sterling was right. The West went down more than the East went up. Nebraska dropped 4, Kansas dropped to 7 bushels. On the flip side, Illinois was up 6 to a record 210. Kind of the same story on the soybeans. Kansas down 4 all the way down to 28 bushels per acre. Nebraska dropped 3, and Illinois unfortunately stuck at 64. I think if Illinois would have more of a realistic number, probably would have broke the 50 mark anyway. But again, it looks like the West went down more than the East went up in this report.
So, talking about canaries in a coal mine, anyone want to wager a guess what this chart that I now look at every day is? Brooks, not going to wager a guess? Or do we lose Brooks?
No, I'm still here. I'm just trying to make a educated guess so it doesn't sound ridiculous.
Can't read the small print.
Every clue on here, it's some comparison with the euro, but I don't know what it is. What do you got there?
What this is, these are credit default swaps on the 4 largest European banks.
So
And
somebody did
as
ask if it was the European credit. I had somebody
that's
put that in.
yeah, that is European credit default swaps. The white line is Credit Suisse. The purple line is Deutsche Bank. And then the ones that we really need to pay attention to, the blue and the orange ones are SocGen and BNP Paribas. And when these things go up, that's bad news. That means the cost of insuring your risk is going higher. And if we go back, here's where we are at the point of the invasion of Europe. This is what's been going on. And as you can see, they're starting to trend up. When these get to about the 200 level, and for those other two big banks, we'll call it 125, 130, that's when we're going to start seeing credit get really tight. And that's a sign that the interest rate movements are going to break something. And that's why I look at this every day, because once that pops, that's going to mean material changes for the dollar, and that in turn will mean material changes for the equity markets, and possibly some backhanded bullishness for the grain markets, depending on the weather. My cotton quotes have caught up with the report, and as you can see, we're down 381. We're almost limit down on the cotton. So.
Hey, Sterling, I did have another question come in. Somebody asked here, what caused the quick rejection in price in soybeans?
Quick rejection in price today.
They're up.
Let's take a look at our quick rejection in price here, and we'll take a picture and we'll talk about the picture. So this is an intraday chart of the soybeans. As you can see, we shot higher. That is algorithmic trading. Right when that report comes out, there's computers, some of them located across town from me here, come in here and they saw that number and they immediately bought soybeans. And they swept the market, meaning there's bids, meaning I'm buying, there's offers out there. They knocked every offer out of the market. That pushed the price up instantaneously. And then somebody else's computer, probably in Chicago, saw these high prices and immediately sold them right back down. So that's why I usually give the report 15, 20, 30 minutes to soak in to see if it's really going to be a trend changer. And, 17 cents on the beans is good. Big round number here on the soybeans is $14. Closing above that would be, from a lot of people's technical point of view, a good thing. Now, if we compare this to corn, let's push this back up. And if we look at the corn market, had obvious, somebody chased it on the beans. We hit that $7 level, which is the big problem in corn. But as you can see, corn got beat up pretty good, but we're making a pretty good recovery. So my guess for the day is beans finish 12 to 15 higher. Corn finishes the day sharply unchanged.
Yeah.
So, Sterling, one thing we talked about this, how things are tight in basis terms. How we calculate that in our last meeting. Some lower Ohio numbers. I didn't see anything trade much over 2,000% over the last week, and it looks like we got a new guest star in Omaha. That's the official AgriSompo North America cat.
Yes, this is Pipsqueak the cat.
He's neither bullish or bearish. He's cattish.
There you go.
Now.
He's got the core.
You've been short bond futures through all this, aren't you? Yeah.
If you take issues, basis is tremendous. If we look at CIF values in the Gulf, they're high. I think that, we've got to assume that the river gets back into shape December, January. There should be some pretty good opportunities on basis. And just like we talked about this negative impact kind of being a ripple effect where we felt it on the river, we might have felt it at a truck house, at a rail facility, away from those export delivery points. The strong basis will be felt in the same way. So hopefully we can do that. see corn trading around 688. One thing that's kind of interesting, I mentioned that farm price that USDA puts out with each one of the supply and demand estimates and the carryout estimate. But right now at about a 1.2 billion bushel carryout, which is close to what the report showed today. It's around a 675 number for what it's worth. So you can kind of look and you say, well, why didn't corn go up? That carryout number went lower. We're pretty close to where that market feels comfortable at a 1.2 billion bushel carryout level.
So here's a chart of upper Mississippi barge freight. And as you can see, that is...
We're not seeing a screen, Sterling.
You got the cat in the corn.
share. Well, yeah. Share. Let's share that. There you go. There's a picture for you. So 1622 is the most recent assessment on this, and that was from the 5th, so it's a week old. If we go
Just
back.
got a text message in from somebody listening, and I'll be glad to do this very quickly. It was, whenever I say 1,000 percentage points, how does that work? I'm going to make this very quick because we're running out of time. But essentially, there are segments of the river that are assigned a tariff rate, and that tariff rate is based on a metric ton, so 2,205 pounds, just to make things really confusing.
And it's based on a number from like 1975.
Yeah, so in the 1970s, we kind of created the barge freight commodity market, if you will. But these segments of river that are assigned this tariff rate, it's not that rate every day. If it traded at 100% of that value, that's what it would be. So I always use the one I'm most familiar with here on the Ohio River, Mount Vernon, Indiana, Paducah, Kentucky, $3.99 a metric ton. At 100% of freight value, that's what it is. So get this. When I said 2,000%, that's $3.99 times 20. That's what it costs to transport a metric ton to the Gulf. So that kind of explains it very quickly. And it trades right now, not so much electronically or on a board. It's more of a kind of a select group of freight traders in the U.S. that back and forth. They trade every day and kind of distinguish a marketplace.
Yeah, it's kind of a telephone and cocktail napkin sort of thing. Here is the St. Louis percentage, and the last USDA reported number, 2266.
Pretty crazy. That's a crazy number. I don't, in my career, I've never seen a rate that high that I'm aware of. Maybe there was a one-off where somebody was just forced to buy a single barge or a small allotment of them. But and to clarify that right now, you can take positions on freight as well. You can take paper positions. So hey, if 30 days ago you thought buying freight for October was a really good idea, you made a lot of money if you held it, sold it into this market. And it doesn't mean that every single barge is trading 2266. That's not it. It's a combination of different values out there. Where there's need on the river system, that's obviously where the barges are trading at a higher percentage of freight rate.
And you can see this chart goes all the way back to 1990. Nothing even comes close. This looks like some of those European inflation numbers.
The industry right now thinks that this will come back down. They really think we'll see something of normalcy. I would predict that with the Corps doing a lot of work in the southern part of the Mississippi River, I think this comes down even over the next week or two, despite there being demand. It's kind of like there's a known in the market. We're always famous for on here saying, the market doesn't do bad when things are the bad news hits. It doesn't do bad when the good news hits. it does bad when we have unknowns, and that barge situation is becoming a little bit more known by the hour right now.
Yeah, and if that improves, that be something where maybe we can put some of those exports back into the balance sheet that we erased today. So, and you can see beans holding on fairly well now, and we're half an hour past the report. So, unless something happens to really change things this afternoon, seem to find a little bit of stability, and we might even be able to get a little fun buying in here on the idea that obviously the balance sheet it didn't scare anybody, and that lower production number, well, you're sub $14. Maybe you take a flyer here. And you can see the soybeans overall really have not performed really as well as the corn has, and we'll see if we can get back above really these three moving averages right here. If we can get back above that, that would prompt a fair amount of fun buying. And right now they're only long about 33,000 contracts. So there is room and capacity for them to come in and start buying. And we'll take one last look at corn. I'm guessing it's still down about 5. And well, look at that. We're clawing our way back towards unchanged. Only down about 3 cents now.
Pretty resilient market. Pretty resilient.
This compared to everything else that's going on in the world and every other item, the corn market has had remarkable resilience. It is not really, and even when you look at the daily chart, I mean, we had our usual typical 4th of July funds. Oh my God, look at all this corn, and they sell it, which is not all that unusual, this sort of business in here. But really, we've been remarkably resilient.
Well, very good. I know we could stay on here all day talking about different aspects of the market. We got some good questions today, and I think even with corn being down a penny, it's deserving of you wearing the hat the rest of the day, Sterling.
Okay.
But I consider this example. Hey, if you put that hat on, you're liable to get a green number on that board. You've got it almost to 1/4 cent down, and I think with the hat, we might be able to break into the green. So no pressure.
I think it's Pip being in the office here. I think he's helping. If I get Rosie the cat in here too, that would probably be enough to actually drive the market higher. Also, I will be off the next couple of days, so if I wear the corn hat, and I'll let Pip handle the trading. Who knows? We might have corn at $12 by the end of the weekend.
We'll hold you to that. Sign off. I've got another engagement I've got to hop on to. Enjoyed the time together, and we'll do it next month.
Sounds good.
Thank you guys so much for being with us. We do have our ASNA Edge marketing meeting next Thursday at 9 o'clock, so we hope you will join us for that.
And remember, we have a special guest.
We do have a special guest. Do you want to tell us just a little bit about Alexis there, Sterling?
Alexis Maxwell from fertilizer expert, and we're going to talk about input costs, because I know we're trying to get everything harvested, but we've got natural gas prices. Even though the futures are down from their highs, they're still a lot higher than they were last year. The river concerns about moving fertilizer, especially since right now we're only looking at one-way traffic. All those things are certainly going to play in, because guess what? We're going to need to start thinking about 2023. Should be thinking about it right now, because if we look at the December 23 corn, 629 3/4. I mean, that's not where we are right now with the current crop. But those are still good prices, and we need to start paying attention.
Yep. I just put the link in there, and I apologize. I did not put too much in there with it. I just basically put the link. So I apologize for that. I usually try to put that. Here's what it is. So but I was trying to get that in there real quick. So that is the link for next Thursday's marketing meeting, and you really don't want to miss that. We'll have the whole team on there plus Alexis. So we hope to have you there. If you have any questions, be sure to reach out to us at marketinginfo@sompointernational.com. We'll be happy to answer your questions. We want to thank you again for joining us. We have recorded today's session, and we will have this in an upcoming DMO.